So you have been helping founders to raise big capital, $5 million plus kind of capital. What does it actually take operationally and psychologically for a founder to go into $1 million plus kind of raise in one go?
Number one, I have to work with the CEO of the company. The second thing is people don't realize it costs money to raise institutional money. There's a retainer fee that has to be paid to an investment banker. Third thing is the team.
So you have been helping founders to raise big capital, $5 million plus kind of capital campaigns. Most founders, you and I are both in the industry, and obviously you are a lot senior and you have a lot of experience. Struggle to even break even after the friends and family round to the angel round, let alone be the Series A round with talking to the real VCs and whatnot. What does it actually take operationally and psychologically for a founder to go into $1 million plus kind of raise in one go?
I was asked the same question in 2013 by a gentleman by the name of JJ Richa.
Okay.
JJ was the Tech Coast Angels. And
Yes.
in my business at Capital Partners Worldwide, I was sending a lot of people to Tech Coast Angels all the time. And once in a while, they would send someone to me at Capital Partners for an institutional raise from funds, not high net worth individuals. And he asked me, David, can you give me some bullet points of what is necessary? And I will not waste your time, and you won't waste our time if you can do that. So I gave that some thought, and I published in a newsletter from CPW, Capital Partners Worldwide, in 2013, 4 bullet points. I edited this 2 years ago and added a 5th point to it, but I can just describe briefly what they are. Number one, I have to work with the CEO of the company. I cannot work with the committee, the CFO, the board of directors. It doesn't mean that I don't meet all those people. In fact, I hope to. But in terms of who's going to be the decision maker, we call him the dog in this business. The reason my business is successful, in my view, is we limit the voices in the room. And the voice coming from the client, it's got to be the CEO, no exceptions. And when I apply this condition, it leads to success. If I don't, the last time I failed was 8.5 years ago, and I violated my own rule. The second thing is people don't realize it costs money to raise institutional money. There's a retainer fee that has to be paid to an investment banker. There's ways to mitigate that, spread it out, but there's no way of getting rid of it. They won't work for free any more than an attorney or as a good CPA would do. Third thing is the team. And it seems obvious that you need to have a good team to develop a company, but you usually can't afford to hire all these people at once. Yeah. So what I try to school my clients to describe in the use of funds people that are not on board yet. And so many times clients cover that up. They're like they're ashamed of it or something like that. It's nothing to be ashamed of. It's actually a positive use of funds that you need to build out your team. The fourth one is valuation. And boy, oh boy, valuations are all over the place. In the world of equity funding, it's a little bit different than with angels. I work with investment bankers that are the best friend of the client. They don't represent the funder. So they try not to set the valuation on day one of the campaign. And they usually revalue the company 1 or 2 times during the campaign because the company's never worth less than it is on day one. So valuation, we've seen as many companies undervalue their company as overvalue it. So don't get too excited about throwing that number out on the table to begin with, because it might not be right. It probably is not right. Right. Then the last one that we added 2 years ago was because of a busted up campaign with a client. Multiple pivots in the business plan. There's what I call intelligent pivot and a stupid pivot. An intelligent pivot comes from what you learn as you're rolling your product out. You find out you have to change something. That's okay. I'll give you an example of that. I had an ophthalmology client that was developing a device for stopping macular degeneration in the retina, and involved putting a little plastic piece in the retina. I'm oversimplifying it, but it reduced the interocular pressure. When this went into clinical trials, I think it was out in the Philippines, about 30% failed. It's unacceptable. It would never make it through the FDA, that kind of failure rate. So they pivoted their business plan to be a drug-eluting stent, to use drug plus the device. And I call that an intelligent pivot because that had more likelihood of working than just the device by itself. The client that made me come up with this new deal point was pivoting their business plan 3 or 4 times. They pivoted from a subscription model to an e-commerce model, to a couple of other things I never could understand. And you can imagine me and my investment banking team are talking to funders, and they go, "What the hell are you talking about? We thought subscription. We thought this was e-commerce. What is it?" And it changed 4 times. So they saw 5 different models, and that won't work. You can throw money at it, but if it just doesn't make sense.
Right.
So that's kind of a long answer, but these are necessary conditions. I just want to point out that's not necessary and sufficient. In other words, if you met all these conditions, CEO, funding, team, and no multiple pivots, that still might not be enough. So what we really need to get funded are necessary and sufficient. So here's where the magic comes in. What gets from necessary to necessary and sufficient? It has a lot to do with the CEO.
Right.
They need to be coachable. They need to be flexible. They need to be strong. There's a lot of attributes of the CEO. And rather than me try to describe what that is on this podcast, I recommend people read Fred Haney's book, The Fundable Startup. Chapters 8 and 9 deal with the CEO and the whole management team, what the role of him is. And he has to really be good at presenting and selling.
Right.
And most companies that start up, the founder should not be the CEO for this very reason. And so this is a big wake-up call to a lot of early stage companies that go, "Well, I know more about this than anyone else." That doesn't matter. It's how you communicate it and how you can sell your concept. But that's described in Fred's book.
So now, Dave, let's talk about the tactical playbook for founders. For founders raising seed or Series A, what is the funding framework or checklist? Can you guide them that these are the must-haves? Don't just work on your flashy pitch deck. You need to have some meat in there, and these are the things that an investor or an investing
Okay.
group.
By all means, I think you should go with previous intelligence. So I say read books. The most important one to read is The Fundable Startup by Dr. Fred Haney. It's available on Amazon for about $22. No, I do not get a commission for selling them, although he claims I'm his best salesman. I will not take a client that doesn't read The Fundable Startup. It's available in an audiobook. It's great, especially chapters 8 and 9 that deal with what the CEO is supposed to do. And it's a big surprise to most people. Or sometimes it's not a surprise and they're not reading it carefully because they probably should be getting themselves out of a job and hiring a new CEO. The other thing is watching Monday Club itself. It's free. In fact, if you're lucky enough to get chosen, I had 2 of my clients get chosen this past Monday, and it's very helpful. Better to stumble in a situation like this than instead in front of Ty or Tech Coast Angels. You want to practice around. This is like the batting cages in baseball. So that Pismo Ventures has opportunities to pitch and have judges judge your pitch. Again, it's kind of a no harm, no foul. That's the best preparation I can think of. And I'm going to get around to this subject sooner or later. Communicate. Ty has put on events, and I've told you that I cannot understand the speaker. So people are going to present for a company should speak perfect English. And if they don't already, they should go to something like Toastmasters. In ENG, we're evaluating a group called Enterprise University that has some free video courses that are very parallel to that. But there's nothing like knowing how to present and communicating clearly. You should not be saying and duh. You should not have your hands in your pocket. Sentences do not start with so. And it just disgusts me when I listen to something like this and my eyes roll back in my head. Maybe I'm just too old. I don't know. But when somebody communicates clearly, it's just a blessing. And when they don't, you go feeling like you lost something. Like, what went wrong? I don't get it. I don't understand what they are. And the last thing you want is for people to walk out of a meeting saying, I don't understand what you were saying. You know, the U.S. Army had a structure for giving presentations. And I'm gonna simplify it. I'm John Brown. I'm here to talk to you about trucks today. That's how you introduce yourself. Then you
Yeah.
talk about trucks, truck this, truck that, truck so. And at the end, I'm still John Brown, and I just gave you a presentation about trucks. It's pretty simple in a way. And usually in a pitch, you're not trying to close a deal. You're trying to
Yeah.
generate additional interest. So
Right.
don't try to make it into something that it's not.
Yeah. So true. So true. Uh, which company is ready for serious capital? What are the parameters that you look or the founder should be ready with when they approach you for some serious fundraise?
Well, those 5 deal points are the beginning point. Then I have to evaluate them. Are they coachable? Are they fundable? There's a lot of things in that book that I look for. Um, I had a client early this year. I'm not going to name names, who argued with me every step of the way along the campaign. I brought people before him, and somehow he thought I was going to hand him the money. I was dealing with some individual investors. I put him in front of them, and he never once asked them for money. And then he blamed me that people were not investing. It was giving me high blood pressure. It's just, this guy was uncoachable. He was pointing the blame at other people instead of taking responsibility. Things like that just don't work. I have a client right now who's the opposite of that. He listens very carefully to what I say. He's brilliant himself. He has a PhD. I'll send him some information, and he'll repeat it back to me in a memo. I think it's partly written by AI, but he has absorbed what I have told him. And I'm not saying that I'm always right, but he's
Mhm.
trying to get it. He's trying to get at what is the next step, the next step, the next step.
Right. Right.
So if people who think that funding is a plug and play business, you just have to do this and that, it's not. It's very relationship driven. If you
Mhm.
find people you can work with, it's heaven. If you can't, you're heading for the bar at the end of the day.
Absolutely. Absolutely. Such great advice. Uh, in one piece of unfiltered advice to founders who are going to raise in coming months some serious money, and what is a typical timeline, David, for a founder to be prepared with? Because fundraising doesn't happen overnight. What type of
Yes,
run
I would
should
say
they?
a typical campaign, I don't care whether it's through angels or through institutional funding, which is what I do, is about 6 months. That's if things go right. It can be longer than that if people don't do what they're supposed to do or if they're on travel and not available. But
Mhm.
I think one of the value added that I give in my main campaign, which is called Tier 1 or Wall Street West, a campaign that normally takes 6 months, I can get it down to 4 months. And that
Right.
means that's 2 months that they don't have to pay a retainer to investment bank. And plus, it's the stuff the investment bank doesn't want to do anyway. It's the preliminary stuff.
Mhm.
So it takes about that long. I got 2 clients through Tech Coast Angels in 2019. It took 6 months. And by the way, both of them fumbled the ball when they were handed the offer and the initial investor, the deal flow manager. Um, it's not faster. It's not faster to go through them. They have a screening technique, but it's not faster. I can make the institutional raise faster by doing the work with the client by myself before they go to the investment bank.
I see.
And from then to build the data room, get out to Wall Street and get the funds, meeting with them, another few months. But in general, most clients don't plan appropriately. I tell people it's going to take you twice as much money and twice as much time as you think.
Mhm. Yeah.
If you ask me, I'll tell you what I think is the truth. And 6 months. And by the way, they should be budgeting between $75,000 and $100,000 for that process. It can be spread out. Unlike when I was in New York, doesn't have to be all paid up front usually,
Right.
but that's contingent upon them making payments on time and doing it by electronic transfer of funds.
Mhm. So a serious round of fundraising will take about 6 months or a little more than that, as well as 25 to $100,000 in expenses related to various retainers, as well as preparing yourself to be in front of those
And
serious
actually,
events.
it's funny, Anshuman, raising more money is easier than less.
Mhm.
$5 million is kind of the floor of what we can do through investment banking. And by the way, it's local. We don't have to go to New York for this. It's right here in California.
Yeah,
But it's actually easier to raise $50 million than it is 10 or 5.
right.
Crazy, isn't it? That's why I don't do high net worth
Yeah,
individual investors.
yeah.
And by the
Great.
way, when I was in New York, they had so many nasty conditions in investment banking. I scrubbed all that out of my agreements. So if clients work with me, they're not going to have a requirement for exclusivity as long as they're transparent about what they're doing. We need
Right.
to know what they're doing so we don't step on each other's toes. There will be an option to terminate agreements. Why not? You know,
Yeah.
if someone's uncle dies and gives them $10 million, they don't need to continue the campaign. Or there could be some other mitigating circumstances. It took me blood and tears and $500,000 to get these terms included in my investment banker deals. But
Right.
that's all I can do. You know, it's not going to go to zero. That's for sure.